Today is Tuesday, the 30th of December, 2008, and this is Brian Shannon from AlphaTrends.net. The market closed with NASDAQ finished with a gain of 2% here today. You can see we saw a little bit of return of volume, but still not anywhere near what's been the normal volume here over the last 20 days, which is traded about half of what the average for the last 20 days is. And that's what that moving average down here is a 20-day moving average of volume. But again, only price pays, and we are in a period of time where typically it is bullish last few days of the year. You can see that the important level of support did hold 28.50, and it seems as though maybe that move below the support that broke yesterday at about 28.90 or so sucked in some short sellers. We closed right up at that level yesterday, got up right through the 5-day moving average, and there really wasn't much of a pullback. It was really kind of a low volume, more sideways drift here, and then just in the last 20 minutes of the day, we had a little bit more spirited buying once again. So on the 1 minute time frame, you can see we were pretty much above the daily VWAP for most of the day here. Only on a couple little occasions did we get below it, and constructive day here. Looking at a 30-minute time frame, you can see that we are back above again this we're back comfortably above the 28.50 level, and it seems as though we might have sucked some shorts in there. This level is going to be important now. We've got it back above the 5-day moving average. The 5-day moving average is starting to advance once again, so I think that longs can breathe a little bit easier. A lot of people are looking for a turn of the calendar to bring in about a new bull market, but we still remain in a bear market. We're getting support in here, which is important to see. I think as long as this market can continue to close above $28.50, that for the intermediate term you want to give the benefit of the doubt to the buyers right now. We have this little pattern of higher highs and higher lows emerging, and the volume is coming in with the buying, as we saw here late in the day, that there was bigger volume here towards the close as the market rallied higher. So potential levels where this market may encounter some resistance. Of course, we've got that bigger level up here, just under $31 a share. That's a 2/3 retracement of this move. That's going to be our more important level going forward at about $30.90. Prior to us getting there, though, we're right now testing this level that has been a little bit of resistance. And could you call that an inverted head and shoulders? Someone asked me. Sure, you could. It's kind of sloppy, but still this little level of resistance recently, $29.60, I think breaking above that could pave the way for a test of that larger, more important level, just under $31 a share rather. Oil was back down a little bit in here today. Oil lost 72 cents. It did hold above 29, which I thought was going to be important. Today's low was $29.24. You can see that 5-day moving average starting to flatten out. It's somewhat constructive, but again, all these gaps just make it really tough to trade. We're still clearly in a downtrend, but maybe we're going to get a little bit bounce. If you can stomach these daily gaps, then I say go for it. But again, that's not my style. So semiconductors were up 66 cents. They gained 4% today. So back above that important level that we've been watching of $17 a share. And you can see it's right up to the declining 50-day moving average as well. Almost, a little bit more volume in here today, almost average for the last 20 days, which has been drifting lower, you can see in here. And that's, a function of if they don't scare you out on the way down, they'll typically wear you out as volume begins to retreat as well. But 1650, I had said yesterday, was the important kind of line in the sand for this market, similar to 2850 for the NASDAQ. We got back above this little level here that had seen a little bit of selling. We also took back that 5-day moving average. And again, as I was saying yesterday, we remain in a bear market, but you have to be prepared for anything. If you're stubborn about being short or stubborn about being long, you just got to look at these things and look at the volatility that we've seen this year, and remember that it's a trading market. Bear markets are typically much more volatile than a bull market rather, and it pays to be a trader in this environment. So the semiconductors, I think we're going to look now at $17 a share as a potential potential level of support once again if this market begins to pull back. We've got the 5-day moving average that's flattened out and starting to rise once again, and we've got of course below that 1650, that if 1650 breaks, now that we're $1 away, I think it makes it unlikely for for tomorrow, but if that level's to break, then there's bigger trouble coming, I would think. The semiconductors though, on the hourly time frame, you can see here that it looks like maybe this is something that people are watching, this little trend line in here. But again, 1650 is the key level for this market to maintain. $18 a share, we'd seen this prior support right in here, then act as resistance right there at about 18. So perhaps we're getting a little bit stretched to the upside in here, and I think that would be a likely area where we may see this market continue to rally to. We do have that 50-day moving average. It keeps testing it. The more times it's tested, like anything else, the more likely it is that it's going to fail to hold the market back. But it is still declining, so you have to be very cautious still. It's it's great volatility is what it is, and that's what makes a good trading environment. The Russell 2000 we had seen hold this trend line here on the 30-minute time frame. I was mentioning that. The 30-minute time frame, this trend line held, and that $46 level. This was again similar to 1650 on the semiconductors and the 2850 level on the Nasdaq 100. Russell 2000 though, we saw it get back above that 5-day moving average, a little consolidation, and then very, very nice strength here into the close. You can see here on the 1-minute chart that when it took out those highs for the day, the volume came in and we had a real nice rally higher here towards the end of the day. So that's a nice move in here. We want to look now at 47.50 as the area where it's likely to find its first support. If we get some pullback in here tomorrow, that this resistance should act as support. And yes, that does look like an inverted head and shoulders pattern. If you're looking at that as a potential, to give you an idea of where it might have the potential to go as far as the measured move goes, the height of the pattern added to the breakout point would give us a price objective just over $49 a share. Looking back here at the 30-minute time frame again, it'd be ideal to see it pull back there and then rally, but the market doesn't always comply with our wishes. So again, 46 is the most important level of support right now. Just below that, or just above that, $47 a share, and then of course again we've got about that 47.5 that should act as support, and looking like maybe we're heading up towards about $49 a share. This level, the $50 level, is going to be important here over the next few weeks, and if it can get above there, perhaps we see this market back up to the level where it was prior to the election, or right on the day of the election here, up near $55 a share. So things are beginning to improve. Again, it's light holiday trade, so you've got to be quick on either side of the market, but keep an open mind towards anything happening. The financials were up nicely today, up 3.8%. I think Goldman Sachs really led the way in there today. If you look at this market, got above recent resistance at about 81.5. We'd seen these higher lows coming into it, so it's back above the 50-day moving average. Things got a little bit frantic, I think, for the short sellers here at the end of the day, as the volume really began to increase, and this stock kind of just went straight higher, 2 points in the last 45 minutes or so of the day. So you can see though that these markets have order to them when they take out this resistance. Here we had a stage 2 uptrend, stage 3 distribution, looking like stage 4 decline, stage 1 accumulation, and it broke back out today. Nice little uptrend in here. Back to how that relates to the financials. The financials got above this level that we were looking at yesterday, which was about $11.90. So it's making some headway in here as well. On this 10-minute time frame, we had what looks like a shakeout yesterday. The sellers failed to take control of this market. We got back above that 5-day moving average, consolidated under this prior level of resistance, and then blasted higher right at the close. And again, I think a lot of that had to do with maybe Goldman Sachs. But once it got above that 11.95, there was a 35 cent move here in just a half hour. So some of these leverage products make some amazing runs during these types of moves if you see them setting up. The big level in here is going to continue to be 11.5. This is going to be a big level here for the next several weeks, I think. If it breaks below and closes below that level, then there could be bigger trouble. Light volume in here again, so you've got to just keep that in mind. Looks like the support should now be found just under $12 a share if we get a pullback. As far as potential upside objectives go, here again we've got that level, so we can see the importance of it here on the 60-minute or 30-minute time frame. I think you might see perhaps a move up towards this little trend line here up near 12.5, and I think that's I think that's probably where we may see it continue to rally up towards. We've got the 50-day moving average just above that. We'll take a look in here. We can see that the 50-day moving average is at about $12.90. So, we've got the 10 and 20-day moving average are crisscrossing in here, which represents a lot of indecision. So when you see a market with, moving averages crossing back and forth in there, you either want to find a new market, you want to stay in cash, or switch to the shorter term time frames. And in this market environment, again, you can see how moving across these multiple time frames, how the trades reveal themselves as we get new data intraday. So the S&P finally finished with a gain of $2 or 2.3%. We did see the heaviest volume here in the last 4 days, but still running about half of what we've averaged for the last 20 days. But again, only price pays, and if you were short, you got hurt badly today. If you were long, then it was a good day. Here on the 10-minute time frame, let's take a look at the where's my trend tool? Not sure how I lost that, but anyways, we got back above this level here with a gap on the open, so we got above that 87.5. The market then, let's take a look on the 1-minute time frame, pulled back a little bit, recaptured that VWAP, got a nice bump, pulled back to VWAP again, and held above that VWAP pretty much all day long. And then same thing, we saw late day strength in here. Back to the 10-minute time frame, we pushed past this level as well, and now we're up towards that. We're looking at these levels, I think, as our first next potential target, 89.5 or so, looking at a 30-minute time frame. This market, again, the bigger important level is going to be and continue to be $85 a share. We're comfortably above that, so I think before you would look at that, we would say, if this market now needs to hold about 87.5, and perhaps we're headed back up towards this 92.5 level, which has been the big level for this market here over the last month or so. We are seeing, for the most part, higher lows in here, and again, this 85 is going to be the more important level. It looks like we've taken out some resistance here on the short term, and perhaps we're heading back up towards there. Tomorrow, I think the volume is really going to drop off late in the day, so just continue to be very aggressive about managing your positions in this environment.